innovation, planning, implementing, growing and reaping capital. Welcome to the Raising Capital stall. Why do we need capital? Every day there are numerous business ideas cropping up. Capital is required to transform the ideas to reality. Raising capital is an essential process for business startups. To run a company, it needs to pay salaries to its employees, procure raw materials for production, maintain machineries, pay insurance and bear transportation and fuel costs and many other costs. Capital is required to sustain business. Ambitious and opportunistic business people look to expand their business, opening new branches, or realize an acquisition or a merger. Business expansion requires raising huge capital. Who needs to raise capital? It is commonly, but not restricted to governments and corporations that need to raise huge capital. How to raise capital? The corporations and governments generally issue shares, procure loans, issue bonds to raise the required capital. Investors invest in these instruments and help raise capital. Where to go to raise capital? There is a market where one can buy and sell capital-raising products. It is called capital markets. In capital markets, primary markets deals with issuing securities or stocks for the first time. Under primary markets we have three basic categories: equity capital market, which involve buying and selling of stocks; debt capital market, that involve trading with bonds and securities; advisory services, which involves helping raise capital for companies. Under equity capital market, we have convertible securities, usually a bond or a preferred stock, that can be converted into a different security, typically shares of the company's common stock. Under debt capital market, we have municipal bonds that are issued by local government bodies, corporate bond that is issued by corporations. Syndicate loan is a loan consortium between banks. Under advisory services, there is merger and acquisition, which deals with buyouts. Private placements, which involves sale of securities to a relatively small number of select investors with minimal regulations. Then we have the restructuring to help raise capital through modifying the debt operations or structure of a company. Who helps to raise capital? Investment banks and financial institutions help raise capital. And one of them is Wells Fargo Securities. Interested in knowing more? Go around the stall to get more information on instruments, participate in events, and stand a chance to win prizes. Thank you for visiting Raising Capital stall.